All right, good afternoon, everyone. This is Saturday. It's Angel Saturday. I'm just gonna make a quick video, guys, for you guys to understand where are we exactly. So a couple of weeks ago, 2 weeks ago, I sent out a notice that I wanted to do a Zoom call, and I'm sorry it didn't work out, just because the time frames and Sunday, and I go to sleep early on Sundays. So with that being said, the reason for that is because I saw something alarming, and again, way back when I sent out a notice right here when I saw this occurring right here, and this was a little head and shoulders pattern. So let me just digress. It's Saturday, markets are closed, and this is the weekend. This is the XPX, the Nasdaq, and the Russell. This is done the daily chart, so we're not day trading these things. It's just to become aware of where in the cycle we are in. So this is very reminiscent to 2018 Q4 for me. Okay, so if you've been watching the videos, I highly encourage you to follow the morning brew, and a lot of you have. If you haven't, you should follow it because in that morning brew, is real. The order is real simple. I'm going through the news, what's going to affect the markets, where we're at in the overall cycles, and the daily part, and then if we start going into the day trading, then I do Bitcoin and Ethereum at the end. So the opportunities are in the middle. But ultimately, what we like to see, the MACDs are coming to the end. So right here, we popped our head once. We can't break these levels up here. We broke down. Now, what I wanted to share with you was 2018, right? In 2018, we didn't get a Christmas rally. So let me go back here. In 2018, we did not get a Christmas rally, and I think it was right in here. So this is 2018. So I'm going to zoom in right. Let me see if I can zoom in. And I'm going to auto. Okay, let me see if I can. There we go. So 2018, I think it was right here. 2018. So this is 2018. If I start zooming in, right, and we go here, this is 2018. So I'm going to just auto that. Okay, so this is what it looks like here. This was, again, we were breaking below the 50s. So this is a, dead cat bounce. It was showing weakness, a lot of areas of weakness here. And this was December 4th, where we sold off into Christmas, right? So uh, that could be a possibility going into this rally. I don't really see a lot of positive news out there that's going to encourage us to go higher. And just to share the significance of this drop was roughly about, uh, you know, uh, roughly about 16%. And if I measure that from the highs at where we were for the year, it was a little more severe than that. It was about 20%, right? So again, and they're not going to last very long, but very reminiscent of what's happening now. So I'm going to fast forward to where we are now. So what am I noticing now? And the reason for this video is because back here I saw a head and shoulders pattern. Well, what I see now, I see a much bigger head and shoulder patterns developing, possibly. So here's a shoulder, here's the head, and this is the neckline. Now, these necklines, the right neckline, tend to be a little bit more severe. I don't mean it's going to drop all in a week or 2 weeks, but more than likely, this is suggesting we're probably going to hit around that 4292 or 4300, which also is a 200-day moving average. Okay, now, why I'm mostly alarming you is because the MACDs are about to break zero. So when they break zero, even if it's temporarily, these swings are going to be very hard, very fast. Now, what's also alarming me today, because as you know, I day trade, but I also take a step back on Saturdays and Sundays to see, okay, where are we? Because the patterns are the patterns. They're the same patterns with either day trade, whatever time frame. It's much easier to identify them in a slower time frame, and this is what I'm doing. We're at the 50. We got a nice bounce on Thursday, right? A recovery bounce, but we didn't get the bounce that we wanted to. So there's no, what does that mean? There's no conviction buying, right? So, the level we're going to watch is going to be that 4603, 4600. Let's just call that. And if we can't get through it, and I'm going to just tell you 4620, because this might be a little a fake out. If we can't break that, let's say 4650, if we can't break above that, then more than likely we're probably going to go down. But 4620 in the short term, if we start going into, because I'm noticing they're selling the pops. So if they sell 4620, start declining, this could possibly start breaking down, because if it breaks 44.95, it is going to go lower, right? The next level down is it's right in here. So just be careful. I'm noticing they're not buying a lot of things. So and then we have a head and shoulders pattern forming. And don't worry, if this drops, there will be another bounce, and then the next bounce drop down. That's the one that I will worry about, as well as this one. And what does this mean really? What is a head and shoulders? A head and shoulders pattern is just a reversal pattern that you see after an extremely down upward cycle. So we try to identify where are they unloading, right? Unloading, right? So, and again, and what do I mean by that? Well, hey, you can hold, that's fine. And this is where you have to have a money management system. But if we're at the top, and what are they doing, man? Is it okay if you have a nice profit to trim off 20, 30% of if you're profitable? If you're down, then obviously don't do that. But if you're up, trim 20, 30%. And then if it falls, if the whole market drops, and you can pick up some more shares cheaper, right? So that's a way you can do it. Again, NASDAQ showing me the same pattern here, right? And this is declining, right? So are we gonna? And the question is, are we gonna get these highs before the end of the year? Now, but don't worry, I'm also gonna give you a solution. If you're worried, possibly. So, and the Russell looks much weaker. Russell takes out this 2120, we go lower. So, with that being said, we'll see. If the Nasdaq can hold that 50, but if the Nasdaq breaks that 50, then we're all going. It's going down, right? So, in theory, what do I suspect? I suspect we're probably going to hold that area, right? If we break above 47.20, 46.20, 46.50 on the XPX, we're going to be okay, right? And we're going to be looking for those levels. But if we, so again, the other thing which is alarming to me is these things, right? So I see these patterns every time in the short term. We get conviction buying as we get a bounce, and then today we get a follow through. We didn't get a follow through on a Friday, which, okay, maybe it's Friday, fine. But usually when we have 1, 2, 3, and I see this on the hourly 15-minute time frame, 1 minute. When we get 1, 2, 3, 4, 5, and it doesn't go higher, more than likely we're probably going to go lower, and that's telling us that, hey, you know what? And this is just going to drop. The MACDs are, if they don't turn soon, then we're probably going to go lower. So again, watch these candles, and these candles represent a daily. So we're looking at what? We're looking at Monday, Tuesday, Wednesday. If we don't drop, we could drop around that time. So something to be, and you can take advantage of these trades, guys. So the other day, which I told you, there's ways you can take advantage of this. So I put out a trade. I don't know if you guys caught it, but you can make 18% pretty easy. It's about a 90% trade where I gave you the trade where you can sell the 47.50 calls, buy the 47.50 calls and sell the 47.50 calls and buy the 47.60 calls. And it's going to yield you around 18% of your money. And that's pretty much about 98% that trade will be successful for the next 30 days. So, I'm thinking about actually, this is how I trade my retirement money consistently, get those profits in. I suppose my day trading, but that I'm thinking about actually maybe doing a course for that. So, to help you guys out. But that is pretty much about 98%. Very boring style of trading, but those look good. On the NASDAQ, we have that, and then we have the Russell. And the Russell looks weaker. If we don't bounce here, we can bump a little higher, but we're below the 200-day moving average. So again, what can you do here to protect yourself? Well, real simple. From aggressive to a conservative approach. If it goes higher, you don't see we break 47.20, you can buy SPY puts, XPX puts, any sort of puts that you want, and buy them for 30, maybe 60 days out. And then, if it drops, what I would say, then you have to manage it. And I'm going to give you the obstacle. If you get those puts and they gain money and value, even on the daily, most people, they will hold on to it and then give back their profits. Don't do that. If you buy them for $3 and they very quickly go to $9, you got 3x, sell them. And then if you want to get back into another put position, that's fine. But take 20% of your profits and then roll into another put position. That way you're only playing with profits and you're never giving back your gains. That's money management. So that's a way if you want to take that approach. That's one way. The second approach you can do what's called a bear put spread, and that's pretty much instead of buying the put, you're going to hedge yourself, and you buy a put, sell a put, and then let's say you did a $10 put spread, you bought them for $2, and once again, where the way people fail is because they wait for the put spread to go to max profit. Don't do that. If it goes to $6, you bought it for two, goes to six, sell them at six, and you made six, then do another one and do it with profits. So don't wait to the max gain, because when this bear happens, it's gonna be fast, it's gonna be hard, and then there'll be a lot of swings here. But we're right at the cliff right now. We're at a cliff. If you were to ask me, the 50-day average is a cliff. So we're not going to stay here very long. A direction will be picked, and I think it'll probably be downward. The other thing which you can do the strategy which I'm going to create the course for, and I'll do it along with you. Getting really, really close to doing it, but we can do a spread up here, and this is called the credit spread, and we just lock in those gains, and we'll do it along with you, and 18%, 10%. Consistent percentage rates, and you don't care if it goes up, down, or sideways, and we got something else. We got the VIX on our side. It's pretty much about 90% win. But that's what I got, guys. That's what I'm seeing. Want to share that with you. VIX is super, super high right now, so we'll see. All right, that's all I got. All right, guys, go out there. I'm in Miami, and I'm going to enjoy a little bit of art today. All right, take care, and we'll talk soon. And oh, by the way, I'm thinking about doing a Zoom call tomorrow, but not too late. If you guys are up for like maybe a morning session, I'm thinking about maybe 10 o'clock my time, so it'll be 7 o'clock your time on the West Coast, or let's say even 11. My time, 9 o'clock is late, might be too late. If you want us to do that, let me know, and I'll arrange that. All right, guys, go out there, go get it, and we'll talk soon.